Alright guys, it looks like Bitcoin and the rest of the crypto market are trying to continue the pump that they started a few days ago, and it looks like Bitcoin is struggling to get back over its previous 52-week high here. You wouldn't know it though looking at the mainstream media, as they say crypto, Tucker Carlson, and apparently X have all taken some of the most spectacular downfalls of 2023. Where have these people been at? I mean, crypto has obviously been up about almost 200% for the year so far, and Tucker Carlson, as it said right here, had one of the most watched shows on all of cable news. But if you looked at any of his numbers on Twitter, you can tell that he brought all of those viewers with him and he added a few more. So I don't think this is one of the most spectacular downfalls, but probably one of the most spectacular rises or redemptions of someone's career that I've ever seen in my life. X has gone down in stock value technically, but I'm pretty sure the users have gone way up and people are definitely more satisfied with the platform than they were a couple of years ago. And if you believe the mainstream news, then you're going to miss out on some of these life-changing developments, and you will have missed out on probably 150 at least percent pump in your portfolio this year, because these guys are still pushing the narrative that cryptocurrency is a dangerous technology, and you shouldn't be in it because only accredited investors are smart enough to handle investing with their own money. Stupid plebs like you just need to go get a stockbroker and make only like 2% per year if you're lucky, while your stockbroker takes half of that. Anyway, even though they do say crypto valuations came back to Earth in 2023, even though if they were coming back to Earth, maybe they were below Earth before, because they've definitely been going up from wherever they were at in 2022. But even the mainstream can't deny that VCs expect them to rise again in 2024, and that's obvious because we're probably going to be getting spot ETFs approved, and that's going to be pouring billions, if not trillions of dollars into the space, which means we're obviously going up in 2024. Bitcoin is pretty much going up right now, and if it can reclaim its previous 52-week high and make another higher high, then hopefully we're going to be breaking over 45 here pretty soon. Speaking of 45, here we have a piece of news from ABC7 Eyewitness News that says, in a stunning and unprecedented decision, the Colorado Supreme Court has removed former President Donald Trump from the state's 24th ballot, ruling that he isn't eligible to be a presidential candidate because of the 14th Amendment's insurrectionist ban. Who the hell does Colorado think they are? I mean, I live here, but Jesus Christ, what is going on? If Donald Trump is the Republican nominee, then what is Colorado going to do? Just not put him on the ballot and only give a Democrat option? If Donald Trump is the nominee, then he's just the options that there is. You can't take away only one option, because basically at that point you might as well just tell us who the next president is going to be, because we're not getting to vote anyway. This crap is absolutely unconstitutional, and I really hope that they can roll back this decision, because it's obvious that this is just them trying to steal the election for the second time. Anyway, like I said in my video on Monday, it looks like a spot ETF is getting closer and closer. The SEC has been meeting with these spot ETF applicants, and we keep seeing them revise their applications, which means that they must be getting some kind of feedback from Gary Gensler and the other people at the SEC. This article from CoinDesk says that BlackRock has revised their spot Bitcoin ETF proposal ahead of rumored SEC approvals. Their proposal now includes cash redemptions, a concession to the SEC that may improve the fund's approval odds. This happened on December 18th, and then today we got news that BlackRock, NASDAQ, and the SEC have met again regarding the Bitcoin ETF. It says this is the second meeting in a month between the parties about the rule changes required to list the Bitcoin ETF. I don't know if this is the same meeting that we were talking about in my video on Monday, but I guess it can't be really, because we just got the news yesterday, I guess it was. So BlackRock revised their ETF application on Monday, and then yesterday, actually, we got this meeting between BlackRock, the NASDAQ, and the SEC. And then today we got another update that says the BlackRock ETF has gotten a new ticker as the Bitcoin price surged past $42,500. I think you can kind of see the timeline of how this thing is progressing here, and obviously they're getting some kind of feedback from the SEC, because things keep changing, and then as soon as they change, they have another meeting, and then more things change again. This means that they're having some kind of back and forth, and like I said again on Monday, they're probably just dotting their I's and crossing their T's and just getting these formalities out of the way, because they're going to be approving this ETF here probably before January 10th. So hopefully they're just making sure that things go as smoothly as possible whenever the thing finally does launch. In other positive news for the Bitcoin price, here we have an article by Cointelegraph that says Bitcoin fees have hit a 20-month high as miner revenues match $69,000 price for Bitcoin. It looks like the Bitcoin fees are reaching what they were at the top of the market in the last bull run. And like I said in some of my previous videos, I think there is going to come a day when these fees do surpass the actual reward for solving a block. And at that point, it's probably not going to follow the 4-year cycles anymore because that's always been driven by the halvening, and that won't matter as much whenever the fees are worth more than the block reward. This is just a sign of that time fast approaching, and it's being driven by the Bitcoin Ordinals. According to this article on CoinDesk, the Bitcoin fee spike to 2-year highs was because of the Ordinals bonanza that has given windfall profits to Bitcoin miners. Ordinals on Bitcoin are basically NFTs, and they run on the BRC20 protocol. The biggest of the BRC20 projects at this time is Ordi, and it's currently up about 2,000% for the past year so far. And it looks like it might be here in this bullish flag, which means that if it does fulfill this pattern, it could have a breakout to around $200, because how you get the price target for one of these patterns is you take the length of the flagpole and extend it from the breakout point on the price here. And if this does end up playing out over the next couple of months, this means that Ordi could have another 275 to 300% pump ahead of it. As this article says, while Ordinals bring new use cases to Bitcoin, they have also made transactions on the network more expensive and slower to settle. Over the past year, the average transaction fee has soared upwards of 25x. Meanwhile, the Bitcoin mempool continues to face unprecedented levels of congestion. This is going to push innovation on the Bitcoin blockchain, which has really been a long time coming if you ask me, because the maxis have been holding down the development on the actual network, and they seem like they just don't want the project to change at all. But Ordinals are here to stay unless there's a huge hard fork, and the maxis are just going to have to adapt or get over it, because as BRC20s and Ordinals gain wider spread adoption, it's only going to make the gas fees worse, and they're going to need a layer 2 to relieve some of the congestion. So let me know what you guys think in the comments. Are you guys interested in any BRC20s or any Ordinals projects, or do you think that Bitcoin is just too slow to have DeFi on its platform? Either way, thank you guys so much for watching, and don't forget to hit that like and subscribe button. Most importantly though, don't forget to have a wonderful day, and I'll see you next time. Bye.